Governor Cook?
So the most important thing when it comes to Lisa Cook's removal is that the US is heading for a higher for longer yields environment. Inflation is going higher, and long-term inflation expectations, it's only a matter of time when they start to unanchor. These type of threats to Fed independence is pushing up the term premium. Trump's threats to central bank independence doesn't really seem to get a break. First, it was Powell, then Kugler stepped down, Stephen Miran came in. Now it's Lisa Cook. It doesn't look like he's going to stop anytime soon, threatening Fed's independence. And I mean, I think even before Trump, Fed's independence was not at a great point anyways. I mean, core inflation has been above 2% for the past 4 years, and the Fed mischaracterized the post-pandemic inflation as transitory, and we're in fact too late to hike rates. So because of this missing the inflation cycle and falling behind the curve, Fed was already not in a great point in terms of credibility. And now these moves, these type of political interference moves, just damages Fed's credibility even more. I mean, right now, there's 3 Trump appointees in the governors. There's like Bowman, Waller, and now Miran. And there's 7 people at the board. And now if Lisa Cook loses her job, then there'll be a 4th person, and Trump will have majority in the in Fed governors, and they can influence the regional bank presidents as well, and their reappointment is due on February 2026. So these are just really like the first chess moves in attempt for a greater really political interference. And I think we're just going to see more of this. This is not the end, I would say. Yeah.
Interest rates, but they don't proceed.
Well, we call him too late for a reason. He should have cut him a year ago. He's too late. We have a stock market that's up 1,000 points today. I better be careful because I go out there and I'll see it's down 1,000, right? But it's up 1,000 points when I came in here. We have a country that the market's the hottest it's ever been. The country's better than it's ever been. We have a military that I rebuilt largely in my first term. We had a great, successful first term, but this is going to be even better. But we rebuilt it. We gave a lot of it away to Afghanistan.
Foreign investor confidence in the US has already fallen quite a bit. We can see that from the dollar falling and decoupling from the yield differentials since April 2nd, the Liberation Day, really. I mean, even though the US interest rates are so high compared to Europe, we really see the dollar-euro like weaken substantially since April. So this type of weakening investor confidence is really going to increase more even if the Fed's independence is threatened, really.
Success for the future period as well.
So what makes US kind of an exceptional economy is this, this innovation, like technology, great institutions, great schools, really. And this like type of attack on such great institutions is just going to really kill US long-term growth, really. I mean, everybody's focused on the impact on, the yield curve, like what's going to happen to the dollar, whether the Fed is going to cut rates. But these type of attacks on institutions and restricting, immigration, both illegal and legal, like these are going to show up more pronouncedly in like 5 years, 10 years, really, when we see that the US is not being able to grow at its current rates right now, because the potential growth is much weaker now in the US.
Putting the pieces together, what are the implications for monetary policy?
In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 basis points closer to neutral than it was a year ago, and the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.